Sticking within the earnings arena, Omnia has just reported its interim results, with the bottom line up 11% to 320 cents. The growth was driven by its mining and agri segments, supported by disciplined capital allocation and an integrated supply chain that kept operations steady despite global supplier disruptions. And joining me to unpack the numbers, the strategy behind this performance and what lies ahead for the group is CEO Seelan Gobalsamy. Seelan, thanks so much for your time today. As mentioned there, Omnia delivering a double-digit growth in earnings despite supply chain disruptions and currency headwinds. Maybe just talk to us about what you see as some of the biggest contributors to this resilience across the board.
Yes, I think firstly what I can say is, this is an excellent set of results. At half year, it's the peak of our planting season, and it's the time when usually we are utilizing cash. What you're seeing is double-digit earnings growth driven strongly by our agriculture, South African business, and our mining business, and then a very, very strong working capital and cash position, just under 700 million rands worth of cash, no debt. What drove this? As you've said, we've had a planned supplier maintenance shut, which went on for circa 60 days. We worked together with our customers and the supplier to mitigate that, to ensure that none of our customers, farmers and mines, had any issues around explosives or fertilizer delivery. Our people worked tirelessly through that. And in spite of that shut, we're able to show this incredible growth driven by our two core businesses.
Zooming in on the agri business, you mentioned there that growth from there was underpinned by Southern Africa. Looking at your operations within Australia and Brazil, where those markets faced drought conditions, how have you been adapting your product mix to mitigate the growing impact of climate change?
Yes, so let's just split our agri segment a little bit. The South African business has performed really well, strong volumes, good agronomic conditions, and the outlook there positive as well. Our SADC business has also returned to profitability, Zimbabwe, Zambia. You see that coming back from where it was in a very difficult state last year. And then I guess the business you're now focusing on is our international business. Our international business is based in Australia. That's a business that does humates and coatings product. That business, the volumes were actually up. In essence, those products are exported to a number of markets across the world: India, China, Brazil, Australia, Africa, and some sold locally in Australia. Those volumes were up, those profits were up. However, Brazil itself and Australia itself saw some significant droughts, and some of the traditional business in those countries weighed heavily, and hence what we saw overall, the segment, the international part of our business, was flat. Having said that, we still have 6 months of the year left, and our partnerships in India, in China, and in the US have been doing really well, and the demand for our biologicals product is incredibly high, and the moat around that business is incredibly strong. So the outlook for our agri-bio business, we're very positive about it, and I think it's good to see that even in spite of the drought in Brazil and Australia, the business has still performed well.
And you've made headway when it comes to streamlining that chemicals division. Can you update us on the progress there with the restructuring plan and what returns you'd expect once that process is completed?
Yes, so I think a few years ago we said we want Omnia to focus on its core, and that core is agriculture and mining. And we've had a chemicals business which has been suboptimal for us, and what we did is some time back we decided to separate that business into 3 components. A component that we decided not to keep and to close, and we've done that. And then a component that we're keeping, which is the bulk trading business, and that business we will synergize into our supply chain. And then a component which we're holding for sale, which is our water care business. The 2 components we're keeping are components, and the component we're selling are profitable, so there's no need to rush and sell that business, under any under any pressure, so we will continue to run our process to dispose of that. And what our shareholders are benefiting now from is a very, very focused Omnia on agriculture and mining, and a chunk of cash that's coming back to the group from our chemicals business. So we've seen stock positions reduce as we sell off some of our warehouses and our land and plants. Some more cash will come through, and that will just add to our strong cash position and war chest to invest in our company. And obviously, should we have surplus cash at year end, we will continue with our capital allocation framework of investing for growth and then dividend, special dividend if that is so needed, and share buybacks, which our shareholders have given us permission to continue.
So shareholders could be smiling all the way to the bank come the full year period. But as we look ahead into the second half of the year, given the backdrop of ongoing trade tensions and shifting global supply chains, please talk to me about how Omnia is positioning both those strong units that are contributing to growth, which is agri and mining, to how you positioning those units to manage these risks at play.
Yeah, I mean, the first thing to say about our two core businesses is they are very noble businesses. So, businesses that are focused on food security, businesses that are focused on mining and mineral extraction, those two businesses have profound impacts on economic growth, job creation, GDP across the countries we operate in. So we've got a very important task to ensure that we are able to supply our farmers and to supply our mines with value-adding competitive products, products that are underpinned by strong ESG principles, and that's what we've built our business on. How are we positioned and where are we going in terms of outlook and thinking about this? We've been focusing our strategy on being agile to ensure that we have the flexibility to move and to adapt to some of the geopolitical changes in the landscape. You see how currencies have fluctuated very quickly. Trade routes change due to wars and disruption. And what Omnia is showing is an incredibly high level of agility and resilience to be able to adapt and deliver in these changing environments. From our perspective, we focus on living this noble purpose, and obviously doing that in a way that's sustainable and delivering good profits to our shareholders and value for all of our stakeholders.
All right, let's leave it there. We will catch up with you at the full year period. Seelan, thanks so much for your time and insights. That was Seelan Gobalsamy, CEO of Omnia.